Once again, welcome back to my channel. Of course, you know that in this very channel I give you guys a lot of educational videos that actually make guys a lot of money in trading. So if you want to understand how swing trading works, I'm going to be showing you guys in this particular video. Now, first thing first, you need to know what is swing trading. Swing trading simply means holding trade for a longer time, for days, weeks, if possible. Okay, now what is day trading? Day trading means for you to place a trade just for that particular day. You cannot hold a trade for long in day trading, and not everybody has that opportunity to always be on the chart every day looking for market opportunities. So we have some who are always busy with work and other things, and just like me. So that is why I'm going to be sharing with you guys how I was able to do this and how I was able to make a lot of money with swing trading. You don't necessarily need to be on the chart every time to do this. So follow me guys, and let's get down to business. So here is what we're going to be actually looking at for our swing trading. So the first thing we want to really consider, because we are actually going in for swing, so the things we're going to be looking at for is the monthly and the weekly time frame. Okay, so if you're a swing trader, you actually don't want to work on the lower time frame for your swing trade. So the first thing you actually need to do is you need to consider looking at the market or the overall trend of that market from the higher time frame. So starting from the weekly or the monthly buyer. So the overall trend is what you actually want to look at for. So when you open your weekly time frame or your monthly chart, okay, so the second thing we are also going to be looking at, after you've considered the overall trend on the monthly, then we'll be going down to the daily time frame to consider our marking of key zones on the daily. So we want to be working on daily key zones. So looking at the overall trend of the monthly or the weekly, then daily time frame, we are now going to be marking at our key zones on the daily. Then the 4 hours time frame is our entry or exit point. So guys, let me show you how to do this. So after we have automatically seen that we have our trend from the weekly, which is telling us that we are actually buying or seeing buys on gold. So after we have discovered the trend, because we can see gold is actually giving us a bullish structure market. So knowing that we have this trend on gold, so we are going to be working with our next time frame, which is the daily time frame. So we are going to be switching down to the daily chart because we have already discovered our major trend on the weekly. So this is the main trend on the weekly. So it's telling us that price is buying, gold is actually buying. So it's giving us the overall trend of actually what gold is doing. So we'll go down to the daily. Now, what are we going to be doing on the daily time frame? So when we come to the daily time frame, what we're going to be looking at for is key zones that can enable us to join the main trend, because we already know that gold for now is a bullish trend. So we are going to be working with zones where we can actually find our key zones or key levels that can make us or enable us to join the trend. Of course, you know, we don't want to just enter the market just like that because the market is buying and we just jump into the market. No, it's absolutely wrong for you to do that as a trader. So what we want to do is we want to make sure that we are marking our key zones, maybe a support and resistance, order block, trend line, fair value gap, any of these things. We want to make sure that we see price coming right to our key zones, and before we move into our confirmation, which is going to be on the 4 hour time frame. So now we are on the daily chart on this our daily chart. So we want to mark our key zones, okay, on the daily chart. So I'm looking for areas where market has reacted to. So our key zones, we are going to be marking our key zones, order block, fair value gap, support and resistance, or whatever that might be your own key zone. So I'm going to mark in here as my key zone, because if you look from here, we can see that market has actually reacted, and this was where I actually picked my buy on gold that gave me some dollars on gold. So this was actually where my first key zone, and we can also see here another key zone again on this place. So we are going to mark in areas where market has actually reacted to previously, so we can see also this level. Now, why am I picking out all these areas? Is if you look from here, if we notice from here, we can see that price action has already reacted previously. Remember that the market trend is a buy. So price action has reacted here previously as a sell. Then market came back later in the future to react or pick that place, which a resistance turned toward a support later in the future, and price action had to use that place for a buy. So after taking the buy, now this is another key zone again for us. Again, you can see our resistance level again now turn to a buy. Okay, we can see another key zone. So resistance, and now it's now turning to a support zone. So this was actually where I picked my previous buy entry on gold that also made me a lot of money on gold. So I'm going to be showing you guys my entry confirmations, but before then, let me show you guys another key zone again. So if you look here, so if you look here, guys, you can also notice that we have the last key zone, which is also here. So we can see here, what do we have here? We can see we have resistance, a support, daily order block support, and you also have another price coming back to that particular place, and you can see the price reacted here and started giving us a buy. We don't want to enter our buy entry on the daily, so we're going to go down to the 4 hours. Now if you look at this, if you're a day trader, before going down for our entry, now you will notice that gold is actually giving a sell here. Now there's a difference between you being a day trader and a swing trader. So a day trader, you just actually want to work on what the price is giving for that particular day. So you want to only open and close your positions for that day. So you don't want to exceed beyond going further. So the day trader, you just want to make money just for trade money on that day. You don't want to go beyond that particular day. So if you notice, guys, now if I can see that this was actually where I made my TP target. So I'm going to be showing you guys on the 4 hours. So when we go down to the 4 hours, we don't want to mark our key zones on the 4 hours. No, we just want to wait for our entry confirmation on the 4 hours. Now, if you look at this, guys, you can notice here. Now, remember, you can see this is our key zone. Okay, this is what our key zone. Now, if you look at this on the 4 hours, so what do I actually need to do, or what do I actually need to do when price come to my key zone on the 4 hours? So we want to wait for price action confirmation, maybe a candlestick confirmation that can actually prompt us to enter the market. Now, if you don't understand or you don't know anything about candlesticks confirmation, I actually have a video for that. I'm going to be leaving the link in the description below, so you can go and watch the video to understand more about candlesticks pattern confirmation. So now if you look at here, guys, you notice that gold, when it got to this our key zone, okay, so now look at this candle confirmation here, guys. So I don't know if you guys can see. So look at it here. Now the first thing I look at is the candlestick confirmation. So if you look at there, we have a tweezer bottom pattern in that particular place here. So you can see this candlestick pattern, a tweezer bottom. But I will not actually want to enter because I'm see a tweezer bottom pattern immediately. So I'm going to wait for prompting. Okay, so after this tweezer bottom pattern is actually formed, then you can also see there is a next break of candle coming up after this tweezer bottom candle that was pattern that was formed. After this tweezer bottom, then we now had the next break of candle that came up after forming this tweezer bottom. And if you notice again, guys, you can also see that the market started to consolidate a bit. If you see here, guys, you can notice that there was a consolidation of price on the market. Now, after that consolidation, we can now see that the market now break the consolidation with this next bullish candle. Now, if maybe I'm the one, I will have entered at this point here, because this was now one thing you need to know about swing trading is that there's always a high risk on swing trading. Okay, there's always high risk on swing trading, but the return is always massive. That is just the good thing about swing trading. So I entered, me personally, I entered after price has closed from this tweezer bottom confirmation candle. So after price closed here, this was where I actually entered. Then I set my stop loss below this level, below the tweezer bottom pattern. So this was where my stop loss was. And then when price was actually doing this, I was still holding my trade. So, and you can see that finally price had to obey, and it hit our target. So this is just the whole thing about swing trading. So you can see there our first target was met, and you can see right now I'm also taking the sell for now, because most times I do more of I'm more of swing trading, but most times I just day trade if I didn't see much opportunity for swing trading. So now this our first target has been met on gold. So that this was where I actually got my first recent $5,000. Then the previous one was here. So this was where I got the next swing money on gold. So after I've already discovered price coming to our zone, because I told you guys, you can see here that we have key zone on this place here. So this was our key zone resistance, and also a resistance, and you can see price coming back to that resistance level. And if you notice here, guys, you'll see that we have a lot of consolidation. So market was actually consolidating a lot in this place here. So you can see when price is already on our key zone, so we can see price was consolidating. And if you look up here, you can see market consolidation. So you can see there was a consolidation here. And although when I entered my buy on this place, I want to show you guys how I entered my buy. And well, I still held my buy even when I saw this consolidation, because I actually am a high risk trader. So I tend to trade because it's a swing trade. So I definitely want to hold the pullbacks. Okay, so depending on working with my target. So if you're a swing trader, you actually want to be holding a trade, even if you have a pullback, and you because you already know the target and where the market is actually heading to, you can hold your losses based on your own risk. Okay, so when I enter the market from here, so gold started consolidating. Even when I entered here, I saw this consolidation, but I was still holding my trade. So I was holding my trade because I already know that gold is actually going to take out this liquidity, because this is liquidity resting above this level here. So now when gold hit liquidity, you can see it came back again. So after gold returned back to this place, now where I marked here is, if you look closely, you will notice that I have an order block at that. I mean a fair value gap on that place there. So this was where I saw price hitting, and I had to enter the market from after the closing of this candle and something like a bullish engulfing pattern that was formed here, and price had to take out a sell side liquidity then I had to enter in for my buy. So you can see that this was how the buy target was able to be able to hit the buy target. So I had to target my stop loss. I have to drop my stop loss below this zone, and I have to target the the next swing level. So when price, and you can see that this liquidity area was taken out, and price action had to move. Price still had to continue the swing buy. So actually, I had to close my trade at this point here because I noticed it was coming down a bit for a retracement. So I had to leave the market. Then the market noticed again that at this point, if we go back now, if we look at here, there is a gap here. Okay, so there's a gap in this area. There's a gap here. So I had to also look at this place. I had to even call it, and I also drop it in, even with my VIP student. We had to also take this trade. So I had to see, I saw a gap in between this candle. So there's a fair value gap here, imbalance that market has not come to fill. So we can see here taking out liquidity. So we have a sell side liquidity that was taken out, and price had to come back to mitigate the gap. And you can see this candle, and after the closing of this candle, you can now see the next bullish big, I don't even know the name, but I know it's actually a big bullish candle. Then after that, then I entered from here. Then I had to still continue our trade from that very target. So meeting up with the target from here, then stop loss adjusted below this previous candle here. So I had to adjust my stop loss. My stop loss was a bit wider. Okay, so I had to adjust my stop loss, and we have to move the market from this very particular trade down to, okay, I had to hold the trade from where it is now. Then after I saw this market consolidating here, so I had to leave. So I had to leave the market. Now you notice here that this market was buying for days, not just one day. So if you check the daily, you'll see that it was buying for so many days. That is the good thing and sweet thing about swing trading. Okay, it enable you to hold trade for several days without closing your position. So, and if you notice here, I now saw the market consolidating in this place on gold. So I actually had to leave. I went out of gold. So you can see how I was able to get the first target on gold. Okay, so our first target on gold was actually met. So, and you can see from this first place here, so from first position here, target and another re-entry again, and that is how, boom, you're able to make massive money on gold when I traded gold and made a lot of money from it. So this is very easy, guys, to actually achieve these things I'm actually showing you guys. The first thing what you actually need to do is make sure that you work with the higher time frame. I said it before. Make sure you have the higher time frame for your decision, starting with the weekly. So the weekly should be your trading decision, your trend. Then from the weekly, you go down to daily, marking of your key zones on the daily time frame. Then 4 hours should be your entry, decision, and exit point. So guys, I hope that you're able to understand how I was able to actually catch swing trades and how we're able to make a lot of money from trading swing. So if you have questions regarding to this, you can also drop, and I'm going to also attend to your questions regarding to this very swing trading. So hope you guys enjoyed this video, and hope this video was actually informative and educative as well. So guys, don't forget to give us a thumbs up and like this video, and also share it to different communities and different groups, to people that are actually aspiring to become a swing trader. Let them watch this video and also get the benefit from this video, just as the way you have also gotten the benefit from this very video right now. So drop your comment, guys, regarding to this very video. Drop a comment. I'll be there to reply as many comments that I'm going to be seeing on the comment section, guys. And don't forget, I'm going to be leaving the description below for all my other videos. If you are interested to watch any of one of my videos, I'll be leaving them in the description below. So guys, Stay well and happy to